Will financial institutions ever handle Bitcoin? The truth is, they already do. Imagine walking into a Citibank branch in the US where elderly customers are looking for investment options. And at the counter, a banker says, "Why not invest in Bitcoin or Ethereum?" That might sound like a fantasy. In 2017 and 2018, it was a fantasy. But today, it's no longer just a dream. This shift began in July 2020. The U.S. Office of the Comptroller of the Currency (OCC), a key banking regulator, sent letters to major banks, like Bank of America, stating that they were legally allowed to offer Bitcoin custody services. Now, what does custody service mean? It means banks can safely store Bitcoin on behalf of their customers. And crucially, the OCC clarified that this was not illegal under U.S. law. But here's what I found interesting. I don't think these banks ever even asked if they could handle Bitcoin. They simply never considered it. Why? Because, like many economists, they operated within the Bretton Woods system, where everything was built around the US dollar. For them, the idea of challenging the dollar made no sense. So naturally, banks weren't fans of Bitcoin. But then, suddenly, the head of the OCC told them, "You can provide Bitcoin custody services." And I think this shocked the banks. It seems to me that the OCC's leader had a very specific vision. And as history often shows us, major events sometimes happen by accident. That very day, something extraordinary happened. Bitcoin, which had struggled for 3 years, finally broke through the $10,000 barrier. And from that moment on, it never fell below $10,000 again. Think about it. Bitcoin first broke $10,000 in November 2017. But after that, it kept crashing below $10,000, rising again, then falling back down, over and over. But the moment the top U.S. banking regulator announced that banks could custody Bitcoin permanently crossed $10,000. That moment marked the true beginning of the bull market we see today. When people compare gold, the US dollar, and Bitcoin, I always tell them this: financial institutions will love Bitcoin. In fact, they will love it so much that even if governments wanted to ban Bitcoin, they probably wouldn't be able to. But in reality, they likely won't even try to ban it. Think about it. Which entity in South Korea holds the most physical US dollars? It's probably the Bank of Korea and commercial banks. Who holds the most gold? In the US, it's the banking sector. Even gold reserves from various countries are stored in their central banks or financial institutions. Sure, some gold is held by private individuals and companies, but compared to the total supply, that's a very small amount. And this tells us something important. We need to think deeply about the true nature of banking. Most people assume banks never fail. Depositing money in a bank is as safe as putting it in a government institution. But in reality, banks and governments don't always work in perfect harmony. Sometimes they cooperate. But historically, they've also competed and clashed many times. In fact, if we look at history, banks have sometimes been far more powerful than nations. In medieval Europe, banking functioned much like the Catholic Church. It transcended individual kingdoms and feudal lords. Even as rulers rose and fell, banking networks remained. In modern times, central banks were created to bring the financial system under state control. But the instinct of banking to operate independently still remains. And this is key. Unless a country is fully communist or entirely socialist, banks must be designed to survive, even if a government collapses. So what do banks do? They accumulate the most reliable and valuable assets. Now, of course, these assets don't belong to the banks themselves. They belong to the people who have entrusted them to the bank. But what is a banking license really? A banking license gives one unique privilege: the ability to use other people's assets as if they were your own. And only banks are allowed to do this. Think about it. When you deposit money in a bank, can you tell them, "Lend it to this person, but not to that person"? The bank makes that decision for you. Your only concern is that when you want your money back, they return it to you. That's why you must never confuse a bank's capital with its assets. A bank's capital is its own net worth. A bank's assets are the total sum of what people have deposited with them. And because of this, banks inevitably accumulate all valuable assets in the financial system. Why? There are many reasons, but the most important one is simple: to survive. Because even if a country collapses, banks must continue to exist. This survival instinct is part of banking's DNA, and that's because modern banking developed in Europe, where financial institutions often outlived entire nations. Now, does this mean the head of the U.S. banking regulator was telling banks, "If you want to survive, you must hold Bitcoin"? No, of course not. That would be an overinterpretation. But what does it mean? It means that as banks store valuable assets, they will inevitably find ways to turn those assets into revenue. If they don't, they're nothing more than a pawn shop. Think about it. A pawn shop stores valuables for people and returns them when requested, charging a small fee in the process. But a bank is different. Banks don't just store assets. They lend them out to generate profits, and they take fees from both sides, from depositors and from borrowers. This privilege, to hold and use other people's assets, is something only banks are legally allowed to do. If you or I tried to do the same, we'd be violating financial regulations, securities laws, or at worst, running an illegal deposit-taking scheme. But banks? They are the only institutions legally permitted to do this. This is the fundamental role of banks. Now think about this. Is it easy or difficult for ordinary people to manage Bitcoin themselves? It's difficult, especially for older people. Why is that? Because storing Bitcoin is risky. Holding large amounts yourself is nerve-wracking. So, what do people do? They entrust it to banks. And what do banks do? They lend it out to generate credit. This is perfect for banks. They provide custody services. They create credit by lending it out. But here's the key point. The very thing that economists and many of your friends consider Bitcoin's biggest flaw is precisely why banks love Bitcoin the most. What is Bitcoin's biggest flaw, according to them? It's crazy price volatility. But from a financial institution's perspective, this volatility is actually a source of profit. Why? Because banks can buy low and sell high. Now you might ask, but how? Are banks psychic? Of course not. Banks don't predict the market with perfect accuracy, but their winning percentage is higher than yours. Imagine flipping a coin over and over again. If you play this game against a bank, you will always lose in the long run. Why? Because banks influence the market. They don't just react to the market, they shape it. This is why gold speculators can't manipulate the gold market like Bitcoin traders do, because banks hold the gold and control liquidity. Banks are not passive players. They don't just follow the market. They create markets. Think about it. The Federal Reserve, which is technically a bank, controls markets by raising or lowering interest rates. When they make an announcement, stock prices fluctuate immediately. Banks may not have the exact same power as a central bank, but their financial networks play a similar role. They can buy low, sell high, and control liquidity. If you play a game against a bank, buying and selling assets repeatedly, who do you think will win? The bank always wins. This makes Bitcoin a dream asset for banks. Now think about this. What if major U.S. banks and financial firms started relying on Bitcoin as a source of profit? We already know what happens then, because financial corporations wield enormous political influence in the U.S. government. So, will the U.S. Congress, with its Senate and House of Representatives, or the federal government, or even the president, move to ban Bitcoin? Why not? Because the collective interests of financial institutions have more influence over politics than almost anything else. The U.S. government does not easily act against Wall Street's interests. And now, let's look at the big picture. What time period are we in right now? This is 2021. The U.S. federal government is highly intelligent. Back in 2014, when I was studying Bitcoin, the U.S. government already knew that Bitcoin could not be banned technologically. By 2017, the leadership of major U.S. banks, like Morgan Stanley and Goldman Sachs, realized that Bitcoin could become a new source of revenue. So what's happening now? What we are witnessing today is a strategic positioning phase. They are building a narrative, but the real decision has already been made. The people who loudly opposed Bitcoin for years, the ones in tuxedos, the bankers, the financial elites, they can't suddenly turn around and say, Bitcoin is the foundation of trust. Bitcoin is the source of financial innovation. That would be too big of a reversal. So instead, they build a narrative, slowly, carefully, laying the groundwork. But don't listen to what they say. Look at what they do. Because one day, everything I'm saying now will have already happened. Grandmothers and grandfathers will indirectly own Bitcoin and Ethereum through their banks. And banks? They will manage those assets, collecting fees and interest, generating huge profits through hedging and financial instruments. Why? Because they have the license to do so. And now, here's my final and most critical conclusion. Who do banks fear the most? It's big tech. Apple, Amazon, Kakao, Naver, Google. These tech giants are the true enemies of banks. Now, who do you think will win? At first glance, it seems like big tech will win, but banks have something big tech doesn't, a banking license, and that makes all the difference. Technology and networks alone are not enough to defeat banks. Even banks that have survived for hundreds of years would be at risk of losing to smartphone-based platforms, because who knows you better, your bank or Google? It's obvious, right? Google knows everything about you. So why won't big tech win? Here's my theory. It's because of regulations and licensing. Licensing is controlled by governments, and because of that, big tech couldn't move quickly on Bitcoin. But if banks wake up and start accumulating Bitcoin and Ethereum, the more they collect, the more governments will protect them. Banks will establish an exclusive financial domain, a protected area of business that big tech cannot take away. And that's why I am almost certain that financial institutions will inevitably embrace Bitcoin and Ethereum. This is my conclusion. Thank you.